and welcome. In this on-demand video, OJM Group Partner Bob Peelman provides an overview of tax loss harvesting. He shares reasons why your advisor should look for opportunities to implement this strategy throughout the year to maximize your tax savings. If you have more questions or want to learn how to incorporate tax loss harvesting into your financial strategy, click the link below to schedule a complimentary one-on-one consultation with one of our experienced team members.
Hi, my name is Bob Peelman. I'm Director of Wealth Advisors and Partner at OJM Group. And today I'd like to talk a little bit about a strategy called tax loss harvesting. Many folks come to us when it comes to saving on taxes as it relates to investments with some of the common strategies as it relates to savings, contributing to 401k plans, 403bs, qualified retirement accounts, getting money into their IRAs, many times talking about Roth IRAs, backdoor Roth IRA strategies. All of these topics we have done webinars on. We've talked at length in many of our podcasts as well as articles, and certainly you could find those on our website at ojmgroup.com. But tax loss harvesting is something I'd like to get into today in a little bit more depth. So before we dive in, I do think it's important to talk about really the three main buckets of investments. And you've heard the old adage that you really don't want to have all of your eggs in one basket. And many folks are very well aware of diversifying their assets, making sure that they reduce risk by making sure their assets are in a variety of different investments. What's not talked about as much is having your investments diversified from a tax perspective. And so if you look at these three buckets, the ordinary income bucket, so this is the bucket of investments that would be exposed to ordinary income tax. And these are investments like IRAs, traditional IRAs, your 401k plan, 403b plan. This is money that has went in pre-tax, has grown tax deferred, and at some point when you want to start taking those funds out, you'll have to pay ordinary income tax. And you can see here in the example, and we're just using the highest marginal rate to illustrate a $100,000 withdrawal, pay taxes, and then what your net would be after tax. The one on the far right here is the tax-free bucket, and that is, your Roth IRA, and is the most common that people are aware of, life insurance, and this is going to come out after tax. So the money goes in after tax, and you're going to come out and pay no taxes on the distributions of that. So you don't get the tax break up front. Money still grows tax-free, and then the distributions are obviously without tax. The middle is where we're going to focus today, and that's all of your money that's exposed to capital gains tax, and that would really be your taxable brokerage account. And long-term capital gains rates of 20%, state, local taxes, the ACA tax, and you're going to be well over 30% on your capital gains tax. And this is something you may pay every single year, depending on the transactions in that taxable account. And you can see how that would impact it. So certainly you're going to have assets in all of these buckets: ordinary income, capital gains, and tax-free. We're going to focus today on some ways inside of your your taxable accounts to harvest losses and what those strategies would look like on an annual basis. So again, just a quick summary of current tax rates. We put on here 2022 and heading into 2023 where these marginal tax rates will be. So you can see here a single filer, married filing jointly. Income ranges all the way at 10% up to 37% tax rate. And then on the long-term capital gain side, you can see for 2022 into 2023, where you're going to get those married filing jointly incomes up over about 553,000 are going to get into that 20% range. So it can quickly rise, even at that income level, married filing jointly at 89,251, where you're going to be in that 15% bracket. So one of the things we do with our clients every year is, certainly we don't want to lose money. Our goal is to make money for our clients as much as possible within their risk tolerance. But there are periods of times where a certain investment may have a loss. And we may decide that it might be time to move into a similar investment and harvest that loss and take advantage. And so, just to give an example, we spent a lot of time with our clients during COVID, right there in March of 2020. Doing a lot of strategies, adding to equities, rebalancing portfolios. The S&P 500 was down over 34%, for that year. And in late December, the S&P 500 had rebounded and it was already above 10% for that calendar year. So if you waited until the end of the year to realize losses, those losses were mostly gone. It was that quick, March, April timeframe when COVID was just coming about and the market was very unsure. There had not been any stimulus yet. And there was this massive correction in the markets. So, I show this example here of, if you sold, say, an international fund that was valued at 543,000 with an initial purchase price of 652 for that fund, you were able to realize a $109,000 loss on that particular fund. And if you sold all of an emerging markets fund valued at 619,000 with an initial purchase of 713,000 for that fund, you're able to realize a total loss of about 94,000 on that particular thing. So in total, from those two trades above, you would have realized about 200,000 in losses, yet remain fully invested for the market run up. So what we would do is we would move to a similar investment. So that way you could stay fully invested in that. So even if you didn't have a lot of gains to use, you can carry forward those losses to future tax years. So any net capital loss in excess of 3,000 can be carried forward indefinitely until that amount is exhausted. So again, very important strategy. I think it's something that makes a lot of sense, that when you're in these periods of volatility, and I think now is timely because we're again experiencing volatility for different reasons. We have a Federal Reserve aggressively raising rates. We have very high inflation right now, a lot of uncertainty in the banking sector. And so with that comes a lot of fear about what's happening out there in the markets. And so you can take advantage of some of that by capturing some losses while staying invested, feeling good that you're offsetting taxes, and making sure you're rebalancing your portfolio. One thing you do want to keep in mind, and this is important, is the IRS has something called the wash sale rule. So a wash sale occurs when you sell or trade securities at a loss within 30 days before or after the sale. So buying something substantially identical, acquiring substantially identical securities in a fully taxable trade, or acquiring a contract or option to buy substantially identical securities. So if you sell security for a loss inside a taxable brokerage account, can you purchase that same security inside of an IRA or Roth IRA? Absolutely. So those are things you have to think about as how you're doing that. I think it's important to note that while this strategy may make sense for many clients, it's not right for everyone. Many times you may not want to take on a loss in a particular security because that security, there's not something similar you want to move to. And we always tell clients you don't really want to let the tax tail wag the dog. So you do want to be in a situation where taxes are important. You're thinking about them. Talk with your advisor about the implications of making these changes. And we have found with our clients that we're able to stay invested, reduce taxes in that tax bucket that's not quite as efficient. So once again, I want to thank you for taking the time today. We're happy to answer further questions on tax loss harvesting at any time here at OJM Group. Thank you.
OJM is a multidisciplinary wealth management firm. For nearly 2 decades, our firm has helped physicians across the U.S. reduce taxes, protect assets, and achieve their financial goals. OJM Group offers viewers a complimentary consultation where we can answer your questions to see if our firm might be a good fit for your situation. Simply click the button below to schedule your free consultation. We hope to speak with you soon. Thanks for watching.